Mortgage pre-approval comes with several benefits. First, it gives you an idea of how much you can borrow, which will help narrow down your search to houses in your price range. But remember that just because you've been pre-approved for a certain amount doesn't mean you have to borrow the maximum. In many cases, it's probably a good idea that you don't. That's because most mortgage lenders use your gross monthly income versus your net monthly income as a factor in determining how much you qualify for. Your lender generally doesn't consider your daily living expenses, things like groceries, utilities, childcare, health care, or even going out with your friends, or monthly debts in its calculations. It's up to you to review your budget to make sure you're comfortable with your loan amount and your monthly payment. Don't rely on your lender to tell you what you can afford. The pre-approval process, say that 3 times fast, could also uncover potential issues that would prevent you from getting a mortgage, so you can work them out before setting your heart out on your dream house. Lastly, a mortgage pre-approval lets sellers know you have the borrowing power to back up an offer you make to buy their home, which in most cases could make your offer a little more competitive. In short, getting pre-approved for a mortgage signals that you're a serious buyer. Hi, my name is Kevin Mitchell, your Washington Realtor with Fathom Realty, and I hope you found this video helpful. If so, please hit that subscribe button for more videos to help you through your home buying journey. Until next time, peace.